It looks like the geopolitical situation is escalating somewhat further, and markets might open Monday down a little bit if the situation isn't contained. The biggest risk right now, if the situation escalates even further than what happened today, this is something we have to keep an eye on. On Friday, another reason why the markets were down on Friday, besides increased odds of geopolitical tensions, was tax loss selling because 2023 was such a good year in the market. A lot of investors had strong capital gains and need to sell their stocks in order to have money for Uncle Sam and for tax day, which is due Monday, April 15th. So we had that. And then the geopolitical situation that happened today, Bitcoin was down 10% within 30 minutes and was now down 20% from its recent high. At the end of the day, this only brings Bitcoin to its level from March 20th, which wasn't that long ago. So this isn't something that we should be overly concerned about in terms of Bitcoin. My overall attitude towards financial assets right now, yeah, there might be a lot of talks about geopolitical tensions and what could come next. But if you own financial assets, now is not the time to be panic selling or being scared. It's important to hold through this volatility because potentially we could have lower prices to come. So if anything, if having money on the sidelines, it might eventually be a good investing opportunity in the days to come if markets decline. But it's not necessarily a time to be panic selling either. So that's something to keep in mind. And then I wanted to talk a little bit about Larry Summers and his thoughts on inflation. He thinks that there's a possibility that the Fed might have to hike interest rates again if inflation stays too hot. And I don't necessarily agree with him. I don't think we should rule that possibility out. If oil spikes and there's more supply chain disruptions because of geopolitical tensions, yes, it's a possibility. You don't want to rule anything out. The 1970s had a double spike in inflation, and certainly possible, but I wouldn't necessarily say it's a base case, at least as of yet. We need more data, more months of inflation data to make that determination. And then we also have, on the other hand, we have economist Mohamed Al-Larian, who thinks that the Fed gives too much play-by-play in terms of their Fed speak about economic data, and he thinks that the Fed should be a little bit more strategic, looking forward in their policies rather than looking at backwards data. And in a way, I kind of agree with that. And he also thinks that the Fed should adopt a 3% inflation target and not a 2% target anymore, considering the world has changed and there's a lot of with the geopolitical tensions, and obviously, a lot of countries are onshoring their manufacturing and supply chains. And with the economic strength, this naturally gives an inflationary level of closer to 3% anyway. So he thinks that the Fed should adopt close to 3% inflation. I kind of agree with that, especially because as I mentioned in my previous video, we're lapping, since inflation improved a lot last year, especially due to economic weakness and with the banking crisis, we're lapping easier numbers. So inflation will naturally be higher because of that, and we'll probably hover around the 3% range for a while.